Welcome back to Teshkid FX for another AGIX price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the AGIX chart, which at the time of this recording is gearing up and has also given us a break above the 20-day MA here on the 4-hour chart. We have also fully maximized our minimum target areas in the formation of this wave 4, and I believe that whatever we are seeing at the moment is the start of this explosive move to the upside in the formation of this wave 5. And before I get further into the technical analysis and also give you my next price targets here on the AGIX chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that AGIX, after making its lower low down there, we started that massive bounce to the upside, obeying the Elliot wave structures, where you can see that I have this Elliot wave structure in red, having that as the first wave, giving us a peak at around the $0.13255 mark. And after seeing the high for that wave 1, we started a corrective structure in the formation of this wave 2, and after seeing the low for that wave 2, we started this massive bounce to the upside in the formation of this wave 3 in a move that gave us a peak at around the $0.66899 mark, and also completed the formation of that wave 3 to the upside. And in the formation of that wave 3, which is an impulsive wave, we also saw this Elliot wave structure, which is a fractal wave within the formation of that higher Elliot wave count 3. And after seeing our high in the formation of that wave 3, whatever we expected next is a corrective structure in the formation of that wave 4, and using the Fibonacci's, connecting them from the low of the second wave to the high of that wave 3, that gave me a minimum retracement area in the formation of that wave 4 between the fib level 0.382 and the fib level 0.5, which I marked over here using this yellow target area, which is an area that we fully maximized. And after fully maximizing it, whatever we expect next is this massive bounce to the upside in the formation of this wave 5, and sketching out a minimum target area to the upside in the formation of that wave 5 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the high of that wave 3. That gives me a minimum target area to the upside in the formation of that wave 5 at the fib level 1.618, and that is at around the $0.82588 mark, and that is the minimum that I'm expecting that wave 5 to the upside to do. And in the formation of that wave 5, which is an impulsive wave, I'm also expecting to see a 5-wave structure in formation within the formation of that wave 5, where I'm expecting the wave 5 of this Elliot wave structure right here in yellow, which is a fractal wave within the formation of this wave 5, to fully maximize our target areas and also fully maximize the formation of that wave 5. And I believe we are seeing such a scenario over here, where you can see that after seeing our low in the formation of that wave 4, we saw that bounce to the upside in the formation of that wave 1, giving us a peak at around the $0.5 mark in what I'm terming as the wave 1. Then we started a corrective structure in the formation of this wave 2, and I was able to come up with a minimum target area to the lower side in the formation of this wave 2 using the Fibonacci's by connecting them from the low of the first wave to the high of that wave 1 between the fib level 0.382, that is the fib level 0.5 and the fib level 0.78, which is an area that we fully maximized. And I now believe that whatever we are seeing at the moment is the start of this wave 3 to the upside. And to also confirm that there are chances that whatever we are seeing at the moment is the start of that wave 3, we have seen a break above the 20-day MA, and in case we continue holding above it, then we have the support that we need for us to continue gearing up and also see a break above the wave 1 high, which will be enough confirmation that we are back in the formation of that wave 3. So here on the AGIX chart, the next area that I'm watching is the area at around the $0.5 mark, because a break above it could trigger even higher prices in the formation of this wave 3, and sketching out a minimum target area to the upside in the formation of this wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $0.6411 mark. Then once the high for that wave 3 is in, we can expect a wave 4, then continue pushing even higher in the formation of this wave 5, giving us a peak at around the $0.8442 mark as a minimum in the formation of that wave 5. So that is what I'm expecting here on the short-term scenarios. So continue watching the 20-day MA and also our next significant high at around the $0.5 mark, because a break above it could trigger even higher prices in the formation of that wave 3, giving us a minimum target area at around the $0.6411 mark. And also taking a look at the indicators on the RSI, we are trading at around the 58 mark, meaning we have massive room for us to fully support higher prices in the formation of that wave 3. Also taking a look at the MACD, we have been able to print a bullish cross, and we're also seeing a bit of an increase in the buying momentum on the MACD, which is an indication that we might have started the formation of that wave 3. And also that wave 3 is fully supported here on the MACD, so let's be patient and see how that plays out, and I'll be keeping you updated.